The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw the wheat markets find a little more strength on the day Thursday and kind of a mixed bag in quartered soybeans. Actually, that soy complex came well off its lows on the session. A good rebound in cattle, some pressure at hogs, stock market under some heavy pressure too on the day Thursday. Plenty to talk about and discuss. Joining us now for conversation. It's always good to talk with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, how are you, sir? Thanks for joining us again this week.
I'm pretty good, except when I look at the stock market today, down about 500 right now, which may be one of the reasons we're seeing a little bit of strength, particularly in wheat, is perhaps we're seeing money flow start to move out of short positions in wheat and look for other value other than equities and maybe overpriced stocks. So that might be in the market today.
Yeah, and I know this wheat rally, a lot of it's been seemingly weather's been the catalyst here, but to your point, maybe that stock market giving us a little more reason to move some money in there. And it feels like a lot of fund managers have been covering those short positions in this wheat trade. And that's kind of rising tide lifted all boats, so to speak. It's helped quarter beans to some degree, I think, this week as well, Brian.
It has. It certainly has. And there's been some pretty good push in wheat. So as we speak, I'm looking at different charts. And one of the charts, just for argument's sake, is I'm looking at December Chicago wheat contract low 565 and 3/4. Today's high 664. That's a dollar rally in that contract. And the front months have had strength as well. July Chicago up nicely here, just from a week ago, down near 550, now 620-ish area. 70-cent rally, well off the lows. Yeah, if you're a fund manager, you might have been bailing out on wheat this week. We had a nice downward channel line from our previous high, connecting the dots back in early April. Market pushed down below that, kept under that line, but then once it pushed through it here on the 22nd, it's just been straight up 4 days in a row. So I think a lot of this is liquidation with the backdrop of dry conditions, more so important in the Black Sea region, and then the Southwest United States, where conditions are said to be deteriorating quite rapidly. And I think that's your story right now in wheat.
Are you worried we could overdo it too fast, too soon in this wheat market potentially, Brian? Or do you think things are looking okay here in the short run?
I think in the short run, they're looking okay. I want to put this in the context. So I'm looking at July Chicago at 620. Back in July of last year was at $8. So we're still way off those highs. But we've moved up enough where we have to take notice and probably start to reward the rally. If you've got good looking wheat, there's nothing wrong with starting to sell ahead. This is the best price you've had since the last week of January to do so. Plus, the market's pushing up toward the 200-day moving average as the next resistance point. July Chicago, that puts you at 628. So got a nice pop in wheat prices moving into the spring. Time to probably take some defensive posturing through some cash sales or buy some puts. Yet it might be the start of bigger things. I will continue to contend that when prices get low, buying becomes lethargic. It's easy to be short. But when you start to turn the corner and then the perception changes, and it's like, well, you know what? We're at world wheat ending stocks at 5-year lows. We're at stocks to usage levels that go back 10 years. You're looking at exportable wheat countries, maybe at 15-year low level supplies. And if the Black Sea region, particularly Russia, looks like they could come up short on crop expectations, which it leans that way right now. The market is we're just starting to see the ship turn around here.
In terms of quartered soybeans, been a little more cautious this week with the rally. I think wheat has definitely been supportive, but in that same thought process here, I think some of what's maybe capped the quarter bean rally has been maybe some farmers selling. Brian, your thoughts on that? I've been hearing some of that chatter anyway. Wondering if you've heard the same, your feelings on where quarter beans sit right now.
No doubt, some farmers selling, and it's probably keeping the top side in. It's April 25th, and as farmers look at the inventory. They've got to make sales and make moves. But on the other side of that coin, we're seeing some basis improvement throughout the country. A lot of areas where it's needed, the end users looking for it because farmers after the end of March aren't selling. And so there's part of me that looks at this and go, you know what? I think farmers that said, you know what, I'm not selling this stuff at the end of March, I'm going to hold it. They're not anxious to sell it unless they get a rally or they have time to sell it or both. Well, they've got some rally here. It isn't gigantic, but they're busy planting corn right now. They're not necessarily looking to move corn. So I don't think we have the same circumstances as we approach first notice day on the May contract. I don't think we have the same set of circumstances. First notice day is on Tuesday of next week. If you might remember, as we approach the first notice day toward the end of March, prices really came under pressure. So I don't think we're in that same situation right now.
I'm glad you brought that up. I was going to ask about that because I know we've seen that happen a couple of times here, especially with some folks having to roll some of their contracts with first notice days here in recent memory. But I look at corn here in this window, and to your point, farmers busy planting corn, but we talk a lot about this, kind of continuing our theme of discussion here, risk management. It's not a time to get complacent necessarily. I mean, if you have the ability to make a phone call while you're in the tractor cab and make sure you got some defensive posturing locked in here, it's not a time to get complacent here. There's tools in the toolbox, right, Brian?
We're not running out of corn anytime soon. Okay, so that's one thing. So the nation has plenty of corn, and it has 1 billion bushels more than a year ago at this time. So we're not running out of corn. So you got to continue to, I think, what I call trickle the corn out. So if you've been light on sales, start picking it up. You do have some of your better prices that you've seen in some time. To put things in perspective, July corn 452. Not that contract's been a lot better, but remember March corn also traded under $4. So if we just fast forward ahead a little bit, or even look at the May contract, which bids will still be placed off of that 441. That's still 41 cents better than where March was just before earlier this winter, just before it got closer to its expiration. So reward the rallies, continue to trickle corn out. If you know how to, if you want to retain ownership and you know how to do it through buying a futures or buying a call option, ownership's an easy task, but you don't want to get caught with too much inventory moving into the summer.
Brian, livestock trade, cattle. Here we go. HPAI back in the news again Wednesday, thinking doom and gloom, and then nice turnaround rally on Thursday in the cattle market. Brian.
Yeah, it really was a beautiful turnaround. Went down and feeder cattle filled a gap this morning, and then turned around. Big outside day, which means it was larger than the previous day's trading range. Good underlying demand market. The media is not so friendly to uncertainty and talking about some of the flu issues. But I think this is what I saw when I saw articles that said, "Oh boy, this could be an issue." There was just as much pushback saying, "Well, look, it's not an issue. This isn't untypical to see this sort of thing in pasteurized milk. There's lots of dead things in pasteurized milk if you get down to the micro level, I guess."
Mm-hmm.
So I think cooler heads are prevailing. I don't know, the marketplace is finicky, but sometimes I wonder the way news changes hands so quickly in such a short period of time. You think about all the major news events over the last couple of weeks, Iran, Israel, this, that, the other thing, the election and then the Trump trial and this and that. The people, their memories aren't that long. They don't have time to concentrate on something. So I think they want to, at least maybe this is my want, to believe, okay, we have people on the job. They're going to try and make sure things are safe. And if they're telling us it's safe, and then you got to move on. And it doesn't have the drag that it used to have years ago, or where it took a day or two to get in a newspaper, and then by the time you got a magazine, a week's gone by and it's still percolating. Here, it's in one day and out 2 days later.
Well, and to that degree as well, I know dairy saw some pressure with that news Wednesday, but then here we find some green on screen in the dairy market too on Thursday. So
In a big
kind of the
way,
same
yeah.
story, it seemed like, Brian.
Yeah, in a huge way. So, and that's the bigger picture is this, it's just I'm just going to call it bird flu. Is this bird flu positive or negative for milk prices? I don't think nobody really knows. On the one hand, is the consumer going to back away from product, or is this going to slow down the production?
Yeah.
And if the consumer doesn't back away and production's slow, well, all of a sudden you get like we have here. I look at milk class three trading under $16 here early part of the month, and all of a sudden, we're over $18. So that's a pretty good run, and the market vote seems to be more in line with fewer cows. We saw that on the production report on the 22nd. Maybe some slowdown in production with this bird flu, maybe slow down in transporting cows, maybe a whole different way of looking at how to do business now with moving cows around and moving cattle around. That could limit some supply if the consumer feels it's safe. I can't imagine the average consumer pushing a cart down the aisle, looking at the frozen pizza and the ice cream is going to make, oh, I don't want to eat that. I don't see it. I think I'll throw it in the cart and go on.
Hog market was probably the one market that was under the most pressure on Thursday. I know export sales were okay, but compared to where they had been, it seemed like that was one of the big catalysts in the hog market, and then maybe just getting some technical resistance overhead here, possibly, Brian.
Possible double top after prices peaked on Tuesday, but still good close yesterday. And really, we're seeing hogs do the opposite of cattle. So it seems like the traders are pretty busy reversing or entering those spreads. So it looked like they were selling hogs, saying buying cattle, where yesterday was just the opposite, or the day before we saw sharp gains in hogs and cattle sell off. So I'm not going to read too much into it. Higher volatility means greater uncertainty, and when you see it toward the top of a market, that probably tells you you're getting toward the top. There's a lot of people betting on both sides, and eventually high prices need more, let's say, more news. You need to feed the bull. If we don't have that, they tip over a little easier. So that those midsummer months in particular in hogs running a solid $12, $13 premium to the May contract, and even more premium to the cash index. I got to think that the market has seen some active hedging or just speculative selling when July gets to 110. It's been there 5 times now, and all 5 times it's failed.
Brian, good thoughts. I know plenty going on in these markets here today. Anything final you'd want to share or reiterate with us here as we kind of wrap it up today?
Just say keep a really tight eye on the markets right now. I know you're busy out in the fields doing so many different things, and so be safe first of all. Second of all, look at December corn. We've talked about 475 as a pivot point. I've got to target the gap at 502. December closed it at 476. You think about that, we're only 26 cents away from the gap. But if you get any doubt, start selling some of that now. I still will contend that if we bet on ourselves to produce a good corn crop, and I say if farmers bet on themselves to do a good job, and they do, there's going to be a lot of supply. So we have to defend against that. Yet the other thing I want to kind of leave you with, and it's just observationally, but just talking to the sheer number of farmers that we do, who I do, good farmers, and this constant wind so you're seeing rain, but you're seeing farmers also say, hey, we're getting into the fields early, and we're getting through wet spots in other areas we haven't in years. And it's dry out there, and it's not going to take long if this wind continues or it heats up, and this El Nino flips into La Nina. So it's kind of looking like that pattern is looking like it's headed that way for summer. So just preparedness for everything, I guess, is my point. If you're a feed buyer and you don't want to jump in there and buy cash today and hold corn and pay interest on that, buy some call options. Get yourself, defend it, but defend prices, both buyers and sellers at this point.
Brian, great thoughts as always. If folks want to reach out to you and have a conversation, multiple ways to get in touch, how can they get a hold of you?
Yeah, best way is just a quick call, 800-334-9779. Love to listen. Otherwise, Brian with a Y at totalfarmmarketing.com. Shoot me an email or check out our website, totalfarmmarketing.com.
Brian Doherty with Total Farm Marketing. Always good to chat with you, sir. Thanks for joining us. Have a great weekend. We'll talk to you next week.
Jesse, my pleasure. Thank you.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.